Alright, good morning everyone. I thought given yesterday's interesting session in the market, we would do another quick video to kind of verbally, or I guess by a video, go over what I typed up for this morning. So if we look at the S&P 500, of course, we had a sell-off on Monday, a bounce on Tuesday, and then again yesterday's sell-off. If you look at the chart on the article, you see that I still remain pretty much focused around the 1538 or 39 area as lateral support, and if we break that level, we will also definitely finally have broken the uptrend that has been in place since November 2012. Of course, the S&P 500 is one of the last indices left to really break. If you look at the Russell 2000 via the IWM, as I keep pointing out in the articles, we are still actually at support, but we've definitely broken all the trend lines. So if you look at the S&P 500, it's about 89 or thereabouts is a pretty key area to hold. If we break below there, and I'm fully expecting us to break through there at some point over the next few sessions, it's about 86 is on the IWM is the target. It's about 860 on the Russell 2000 itself. Speaking of the Russell 2000, if you look at the article, I wrote about 4 different parts of the market that have seen lower highs with last week's bounce, i.e. not confirming the new highs that we saw in the Russell 2000 and some of the other parts of the market. If we start off with the transportation sector, IYT, those of you who have been following me for longer than a cup of coffee know that I tend to look at the transports as a leading indicator still, and understand Dow theory as it stands. When it was first written, is kind of dead, but transports still give us some pretty good clues in the near-term price action at the very least. So if you look at the chart of the IYT, very much looks the same as all the others I'm about to go through, and the Russell 2000. Lower high last week, key neckline support, and if we break below there, all of these things that I'm going through have at least another 2, 3, 4, maybe 5% lower from the neckline. Same thing goes with all the others. Housing, I talk about housing, talk about the SOX, and that's pretty much sums up what I wrote. The other thing I would point out is what if we get a bounce here? What if we get a bounce to new highs? At what point would I want to change my mind? Well, if we look at the S&P 500, which is again the one I will be going off for clues whether the rest of the market can go lower, because as I just said, the rest of the market has seen lower highs and is at much more significant near-term support. If the S&P 500 would get above 1580 at the very latest, I would certainly have to change my mind back to a more neutral stance and consider that the market might actually get a daily close above 1600. One last thing is quickly on Apple. A lot of people have asked me yesterday what I'm doing with my short Apple position. In full disclosure, and this was sent out to my clients at noon yesterday, or just thereabouts. Maybe I think it was 12:30. I closed the short position in Apple around 400, just around the $400 mark, 401, maybe something like that. And right now I'm back to neutral. So I would not be wanting to chase the stock lower at this point. We'll see what happens. There's some downgrade cycles that still have to happen on the sell side, and as such, I think the juicy short side, at least from where I stand on the swing trading perspective, is pretty much over. So I hope this makes sense. Have a great trading day.